Flexible spending accounts, or FSAs, can save you money on healthcare expenses such as copays, deductibles, and prescriptions. Sue participates in both the Healthcare FSA and Dependent Care FSA to save on child care expenses. Let's compare Sue to Amy, who does not take part in the FSA, and see how she saves money. Both Sue and Amy have a monthly salary of $3,000. Each spends $100 per month on medical expenses and $300 per month on child care expenses. Sue uses the FSA, so she's going to set aside a total of $400 before taxes come out of her paycheck. Amy sets aside nothing. That makes her taxable income $2,600 versus Amy's $3,000. Taking 30% out for taxes, Sue's take-home pay is $1,820, while Amy's take-home pay is $2,100. Now, while Amy comes out on top here, she still has to pay her monthly medical and dependent care expenses. So let's subtract $400 from Amy's pay. Sue set her money aside pre-tax, so we will not subtract anything from Sue. Now Amy is left with $1,700 and Sue is still left with $1,820. You see, by using the flexible spending account, Sue saves $120 per month. That's a total of over $1,400 for the year. Sue's FSAs are administered through Gilsbar. Gilsbar provides her with a debit card for her healthcare FSA, so she does not have to pay out of pocket and wait for reimbursement. However, Sue keeps track of her receipts and itemized bills just in case Gilsbar asks her to verify a debit card transaction or she is ever audited by the IRS. Acceptable forms of verification will include the date of service, cost, and procedure or item purchased. Due to the availability of ineligible expenses such as toothbrushes and teeth whitening procedures, all dental expenses will need to be verified with Gilsbar. The dependent care account does not have a debit card and Sue must file a reimbursement claim with Gilsbar. Claims may only be filed for past dates of service within the plan year. Gilsbar also provides Sue with an online account at mygilsbar.com so she can view her balance, check for transactions needing verification, and access claim forms. An important point to note is the difference between funding for the health care and funding for dependent care. For health care, the total annual election is available the first day of the plan year, so Sue can use all of her funds up front. For dependent care, however, funds are not available for use until they have been deducted from her paycheck and deposited into her dependent care account. Remember, over-the-counter medications are no longer considered qualifying expenses unless they are prescribed by the doctor. Since Sue uses an OTC for her allergy medication, she will need her physician to write her a prescription. Lastly, the IRS regulation use it or lose it. If Sue does not use all dollars set aside by the end of the plan year, she must forfeit that money. Sue only sets aside money she knows will be used for expenses incurred during the plan year for her and her dependents. At the end of the plan year, Sue has an additional 90-day runoff period to file for reimbursement on out-of-pocket expenses she incurred within the plan year. Remember, the FSA account does not automatically continue. You must re-enroll each new plan year. For maximum contribution limits, please refer to your benefits booklet.